Hi, I'm Jacob, and welcome to Finance Fridays, proudly sponsored by the Loanworx Group. Today, we'll welcome Mark Ryan from the Loanworx Group to talk to us about home loan deposits. Thanks for coming down, Mark.
No worries, Jacob. Thank you.
So, Mark, what's the minimum deposit for a house?
Minimum deposit? Well, I suppose we need to look at the bank's point of view. The banks will lend up to 95% LVR. So that means we've got 5% that needs to be put in by the purchaser. So there we go. 5% would be the minimum, and which allows for a 95% loan, which is termed an LVR.
What is an LVR?
An LVR, that stands for loan to value ratio. That's the loan amount over the value of the property, and multiply that by 100 on 1.
So is there costs like stamp duty?
Yes, there are. Stamp duty is one of the government costs. There is stamp duty, there's transfer fees, and all those type of fees. So that's all government costs.
Okay.
Yeah.
So who does the lender's mortgage insurance protect?
Lender's mortgage insurance. Well, it's exactly what it says. Lender's mortgage insurance. So that it actually protects the lender. A lot of people out there think that covers them, the purchaser, but it's nothing to do with the purchaser. Has to protect the banks because the banks are lending in the money, so therefore they, over the magic figure of 80% LVR, which is loan to value ratio, over that magic figure, LMI is charged. So lender's mortgage insurance is charged, and that protects the bank's interest.
What are the costs involved in attaining a mortgage?
The costs, there's numerous costs. We did touch before on the government costs, there's stamp duty, etc. Other costs are the bank costs, which are application fees, settlement fees, legal fees, search fees, all those types of fees that the banks will charge, and other costs associated, solicitors' fees, because everyone needs a solicitor's protection, or conveyancer, and they handle the transfer from one person to the other. So that's that. Insurances come into it. You need building insurance. And adjustments, the council rates, that's always adjusted. So they're the main costs involved, and it does certainly add up.
Now, the other day, my mate told me that I could buy a house with a $5,000 deposit. Sounds too good to be true. Is it?
Well, generally, and when that says that sounds too good to be true, yeah, it probably is. But $5,000, yes, builders, not anyone else, but the builders will say, well, okay, we can build a house for you for $5,000. Obviously, that's only $5,000. It's a down payment. So that it basically means that yes, I'm keen to go ahead with this building. Right. But there are a lot of other costs involved. As we said, the banks will loan up to 95%. But then there are all the other costs involved with that, which we need to save. However we do that, and that can be organised by the builder as well. You could be put into a savings plan, and all those things are added up. So at the end of the day, the $5,000 is a small token deposit. It's not the full deposit, but it's a way to start the process going, and that's what the builders will manage for you. So that's why that $5,000 is true. That's right.
Thanks, Mark. And that's a wrap for today's Finance Fridays, proudly sponsored by the Loanworx Group. Make it happen.